The market finished the week at an inflection point of sorts today. Investors did not appear eager to either buy or sell stocks ahead of next week's Federal Reserve meeting, but they were eager to sell shares of semiconductors, which have gotten themselves caught in the middle of the trade war with China. Add to that the rising geopolitical tensions in the Gulf of Oman, which lifted oil prices for a second straight day. And when all was said and done, the Dow was down just 17 points. We're at 26,089. The Nasdaq was down 40. That was the technology stocks there. And then S&P was down 4. And for the week, all the major averages were up only fractionally. Mike Santoli says the market seems to be teetering.
Stocks finished an indecisive week at something of a crossroads. While the S&P 500 held the gains from the 5% rebound from the start of June, trading volume slowed and the indexes worked sideways as investors remain in suspense on a couple of crucial policy issues. The Federal Reserve meets next week as the bond market has moved to price in very high chances of a rate cut by July. The Fed has struck a tone of patience on rates, but the slowdown in global growth and decline in inflation readings has Treasury yields near two-year lows as the market essentially lobbies for easier policy to ward off further economic deterioration as trade frictions worsen. And on that trade front, world leaders meet at the end of June, which could be a forum for the U.S. and China to move towards some agreement that has a chance to avert President Trump's applying tariffs on another $300 billion in Chinese imports. At this point, though, the market is unwilling to assume any particular outcome. It's not yet known if the two countries' leaders will even meet at this point. This also feeds that indecision and anxiety. The U.S. economy continues to hold up okay. The stock market, likewise, has proved pretty resilient thanks to steadier defensive sectors such as utilities and consumer staples. The S&P 500 has recovered nearly all of the 20% fourth quarter collapse, now sits some 2% from its record high. Yet the S&P at these levels is also merely about where it sat in late January of 2018, meaning it has effectively made no net progress for 17 months. As a world in policy flux keeps investors unsure of how much time and energy is left in this decade-long economic expansion. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.